Hey guys, welcome to Thursday with Sean, and this is the big news of this week. The China stock market has been falling. So it's a great wall of China actually tumbling down. So, okay, let me just log on to my Facebook so I can see some reactions and comments that you may be asking me. All right, I've got my Facebook ready as well. Okay, so let me know if you have any comments so that I can also answer to your questions. Now, the big news is this: China market slides as yuan falls and Tencent drags the stock. Okay, so there are two situations happening now. The first situation, the Chinese yuan has been devaluating, and the reason is because China is going up against US. Just in short, in case you are not really aware of the situation, if you have been in tune with this thing called the trade war, let me show you a bit more about my face first. Now, if you have been hearing about the trade war, what happened is Mr. Trump of US, he has declared trade war by really imposing tax on quite a number of sectors like the steel and aluminum sector. Now, what does this mean? Let me explain to you what it means. So now, Mr. US, right, what they are doing is they are imposing tax. So for example, if you want to import steel and aluminum from China or from the rest of the world, you have to pay a tax on them. So imagine some of the big users of aluminum and steel. For example, your automotive industries in US. For example, you are Ford Motors or you are creating Boeing, planes. You need a lot of metal, correct? You begin to consider, if I import from China or any other parts of the world, I have to pay quite a high tax. Why don't I really get it from my fellow American companies that's producing steel and aluminum? So you see, what is Mr. Trump actually doing? He is trying to keep the money in the country because it is very competitive. In fight with China, it's almost impossible to produce as cheap as them. Therefore, because we're not able to produce as cheap, we are not as efficient, let's make them more expensive. That's what US is doing. And what is China's response? This is the response. More expensive. Why don't I do this? I devaluate my yuan. Okay, so now again the plane manufacturer like Boeing or some other companies that need a lot of steel and aluminum, I'm thinking, wow, okay, now the tax has increased, but the Chinese yuan is cheaper. Meaning to say, if I fork out US dollars to go and buy, I convert, in the end it turns out to be the same. So this is a countermeasure, as you can see. Now, the first thing I want to share is this: throughout history, there are many trade wars. I found this beautiful infographics, and I just want to share the implications of the trade war. So, okay, can you guys actually hear me? If you are okay, okay. If you can hear me, just give me a thumbs up and just let me think. Who do you think will win, China or US, or do you think both will be losers? What do you think? Just put in the comments so that I know that you can actually hear me. Now, let me go through some of the very interesting trade wars in the past and what are the outcomes. So this is infographics I found from this website, you can see. So you see, wow, many trade wars. It actually started many years ago, like even 1930. There's many trade wars, Now, that's where US actually, and a lot of times it's started by US. They fight against European countries, against Canada. And 1930, right, is one of the so-called biggest trade war that they mentioned, where they start to impose tax on agricultural and industrial goods. There's where they even say that, wow, the imports and exports dropped by 60% per year. Now, what does it mean? It means that, right, because let's say my country, I'm no longer exporting from other countries, and I'm no longer importing as well. What it means is, right, trade actually slows down. When trade slows down, it means that people lose job, nothing for me to produce really. No one is buying from me, and we're also not buying from them. We actually lose the job. Now, I studied economics when I was in university. Quite a huge percentage I returned to my teacher, but doesn't matter. The key important portion, right, is this. For economics, right, there's this theory actually called the Adam Smith theory, where we believe that it is more efficient for economics if we don't impose all these tax, don't try to protect this guy, protect that guy. We let the most efficient person win. So the idea is this, and I personally slightly subscribe to it. You may not agree with me, okay? But this idea, Adam Smith theory, is saying this. Okay, because now, for example, US, right, they are thinking that, hey, because, right, people rather import from China than use our own homegrown steel company, So we actually tax them to make them more expensive. Now, so Adam Smith theory, we believe that it's free hand economy. We don't tax them. If they are more efficient, you make sure that your homegrown companies become more efficient as well. They must find their own resources to make themselves more efficient. Don't go and protect, because when you protect, that's where all this trade war happens. Personally, I'm a little bit more slightly in favor of that. So what about you? Which one do you think you prefer more? Okay, but you can see, right, when trade war happened, the import and export drop, right? What it means is people lose job. When they lose job, things spiral downwards. Why? Because if I lose job, I have no money to spend, then I have no money to go and buy my McDonald's, right? Or whatever that you eat, okay? Maybe you eat Subway. I have no money to buy Subway. Then Subway realize, hey, my customers is lesser. So it's getting lesser. I better not expand too fast, or because it's slowed down so much, I tell the guy who I employ, say, hey, I'm sorry, I have to sack you. And then more people get unemployed and it actually spiral downwards, okay? So that's why trade war is typically not a good thing. Now, some other trade wars in 1963, there's the chicken friction. Okay, what did they tax this time? Chicken, potato starch, dextrine, which I don't know what's that, brandy and light trucks. All these, right, is against Japan. Now, the interesting thing is this: what happens during the trade war? Many things happen. They actually hit into the sales. Again, you can see this is the portion. What happens, right? There will become a point in time, right, where people cannot take it and say, hey, come on, let's talk again, let's actually sign a certain contract again. And that's where the trade war stops. But very interestingly, right, all these trade war will definitely cause a short-term unintended consequences. Meaning to say, nobody wants things to be bad, right? I don't know, I mean, for sane leaders, they want the economy to be good, they want people to have employment. So all this trade war causes unemployment, causes things to slow down. So this may be what is happening right now. Now there's the war of the wood, US versus Canada. There's the battle of the bananas. Well, banana, they also want to fight, So this is amazing, right? So for banana, right, Europe actually imposed heavy tax on the Latin American bananas. So to counter them, right, they begin to fight each other, have complaints. They also fight pasta, walnut, lemons. People like to fight this kind of things. A lot of times triggered by certain things. But you see, right, at no fault of the other leaders, if you're going to tax my bananas, right, and I'm going to sit here and not do anything, it sends a statement to say that, hey, you can eat me alive, It's like, I'm the banana, you're peeling me alive. So I have to actually counter you. So that's why every time someone does something, there will always be a counter effect. Now, as we move on, right, there are many trade wars. And lastly here, 2018, Trump's tariff. Okay, there's steel, aluminum, cars, agricultural, consumer goods. Actually, so you can see Donald Trump imposed 25%, Imagine, right, whatever you're buying increased by 25%. You are a business, you need to actually get materials, but now you have to pay 25% more. Wow, for you like that, man, the answer is definitely no, correct? So that's why all this situation, right, cause China to retaliate and say, you want to tax me, make my goods more expensive, I will counter by making my yuan cheaper. Okay, when I devaluate, what is the issue? The issue with this is, when China does that, their stock market will be affected. Why? Very simple. Because now, if I invest in Chinese stocks, okay, I buy into Chinese stocks, and when the Chinese yuan devalue, right, when I sell the Chinese stocks and I take my money back, you know that there's an effect. So for example, you see, I buy the stock increased by 20%, I sell the stocks, but the yuan actually devalued by, let's say, 20% as well. I don't actually make any money. So that's why, right, with this in mind, the stock market starts to slide. You say that, wow, it's something that will be impacting the stock market. So this is the first issue, what that causes the Chinese market to actually slide. The second issue is something that actually is more of interest to me, is Tencent Holdings. Now, for those who do not understand, Tencent Holdings is, you probably heard of WeChat instead. So why did WeChat, or rather Tencent Holdings, stocks drop? Because it's one of the, I think it's the most valuable stock in China right now, based on my memory. Okay, I think first or second. And what happens, right, is when their stock price drops, right, it affects the whole entire index, since they are one of the top most valuable stock. So why did the stock price drop? Very interesting. Two things happened. For the first time in history, Tencent actually showed a drop in earnings. They have been making more and more money. So everybody was wanting them to make more money, right? And suddenly they drop. The second thing is this: the Chinese government, they are becoming stricter in terms of the games content, because they are saying that they are concerned about addiction, they are concerned about the content. So the interesting thing is this: the interesting thing is Tencent Holdings, they fall 3% after disappointing earnings and also scrutiny from the Chinese regulators. Yes, and as what Pete mentioned, we cannot predict what happens. So we have to look for great companies. In fact, thanks for reminding me, Pete. I wanted to tell this. The reason why I show you the different infographics, right, is you realize that after all the war, there's always an initial dip. But what happens now? What happened to European countries? What happened to Canada? You go and take a look. Since the time they fight until now, the market continue to rise. Okay, short-term dip actually creates better opportunity. Look at it from long term. Let me ask you this: Tencent Holding, okay, in China they have BAT, okay, Baidu, Alibaba and Tencent. I almost forgot. I almost said Amazon, okay. Well, so Baidu, Alibaba and Tencent. Now, these companies, right, they are still growing. They still have a lot of potential to grow, in my opinion. So don't look at just the short term. Okay, in fact, look at the short term as an opportunity. Not be really like concerned about, wow, should I actually dump my stocks if you're holding them? And in fact, see whether it's an opportunity to like accumulate some of them, so that as they make more money, you can actually grow together with them. So this is something that I'm looking at right now. So let me share with you something that I look for. Okay, so let's take a look at Tencent Holdings finances in terms of the valuation. Okay, so here we are. This is Tencent Holdings on the Morningstar website. Let me click on valuation. Okay, now for me, I usually like to look at simple things. I look at simple things like P ratio. There are many valuation methods. Baidu, Alibaba, Tencent. Okay, so for the P ratio, right, you can see that current P ratio is 33.77. Is this cheap or expensive? Depending on how you evaluate Tencent Holdings. If you use PEG, which is comparing P to growth, if you believe that Tencent Holdings can grow at a rate of more than 33.77%, this may be a good valuation point. Now, comparing it to the past PE ratios, right, you can see at one point in time it's only 20-something PE, it grew to 40-something. Average 5 years, if you can look at my mouse, this portion is 46.61. This is the average PE, and now it's 33.77. Of course, with the Chinese government regulation coming in to clamp down certain contents or to make gaming a little bit more restricted, right? Will they be affected? Because the Chinese government are afraid, hey, our guys are all addicted to games, you know. But think about it, you know, Tencent Holdings, right, in my opinion, has become one of the big stable company in China. It can be probably, if you compare to like in Singapore, maybe the Singtel, or in US, the Exxon, some of the biggest employer in the country, right? Tencent is probably at that stage right now. Will they totally like close down, or can they continue to grow? In my opinion, they have this thing called a strong economic mode for the BAT stocks, okay? So 33.77, is it a good time to enter? In my opinion, if you are interested, I mean, personally, I'm interested to take a small little. By the way, disclaimer, I'm not supposed to tell you what to buy, what to sell. Some of these stocks I'm vested and I'm interested to get vested. So please do your own homework, okay? Now, so if you're unsure whether should you buy Tencent or not, go and ask your broker. Okay, no, actually go and do your own homework. But I want to share with you something. I did something additional, another step, because we always believe in the idea of portfolio. So because Tencent went down and the Chinese stocks has gone down, this may be an opportunity. But if you're not sure which individual stock to buy, go and look for ETF. So this is the portion that may interest you. I did ETF screening. I screened for China stocks and China technology stocks. And these are the 4 stocks that came out from the screener. Okay, you can see CQQQ, there's another QQQC, KWEB, PGJ, okay? And you can see their expense ratio, their P ratio. These are possible stocks to buy into if you believe in the Chinese technology company. So let me just go in a bit deeper and let's take a look at some of them. Feel free to make more comments, you know. Hey, by the way, Pete is online now. Please ask him more questions. He is into this. In fact, let's check his portfolio if you can, okay? I doubt he's going to give us his password. Okay, now let's take a look at some of these 4 ETF, okay? 4 of them. This is CQQQQ. And what I want to show you is the holdings. So you know what you're buying. It's important to know what you're buying. But I think I did an initial screen already. You will not be surprised, okay? For CQQQ, the top holding is Tencent Holdings, about 10%, followed by Alibaba, Baidu, and all the rest, very, very familiar stocks if you're looking into Chinese companies, okay? So this is CQQQQ. Actually, I did like I mentioned to you, I did a screen already. Most of them are holding very similar stocks because if you talk about China, internet, or technology stocks, they can't differ too much. Again, this is KWeb. KWeb has Tencent Holdings, Alibaba, Baidu, same, almost similar, right? You can see. Okay, and now this is QQQQC. Okay, so you can see, right, if most of them are similar, then what then do we look at? Let me just quickly go through to just show you that. You can see same thing, Baidu, Tencent. It depends, it's just that the weighting is slightly different, okay? And the last one, this one is very interesting. It's called Invesco Golden Dragon China ETF. And about 50% is in technology. Some of the biggest holding up here is also like C-Trip, Alibaba. Oh, interesting. Do they have Tencent? Oh, this company, they have Sinopec, which is an oil and gas company as well. They do not have so much of Tencent. But you can see the train of thoughts of how we are looking at ETFs, and this is a good time to buy the ETFs, okay? So let me go back to the screener portion. Okay, here. So what do we look at? The first thing we look at is the expense ratio. And you can see, okay, for most of them, less than 1%, the lower the better. Expense ratio is how much they charge you every single year to maintain this portfolio. It is not really a management fee because they don't really manage. They just buy the stocks based on the weightage, and voila, they have charged you a certain expense ratio. Now, so what do we look at? Expense ratio, roughly similar, not much to compare with. So I like to do something simple. I look at the PE ratio. So for PE ratio, you can see, just do a click, and they have sorted for me from cheapest PE to highest PE. Cheapest CQQQ, followed by QQQC, and most expensive is KWeb, 23 PE. Now, so for 21 PE for China region ETF, is it worth it? Let's go back and take a look again. CQQQ. CQQQQQQQQ, 3 Qs. Okay. So, oh wow, this is interesting. This CQQQ, whatever. Okay, you can see that Tencent Holdings is taking about 10%, followed by Alibaba and Baidu. The BAT is here. Add up together, it is about 27%. Okay. So interesting. Plus a lot of the other potential small little QQ companies is trying to catch up. And I like this idea, because for ETF, right? Again, please watch rather do your own due diligence. But for ETF, right, there's the whole thing. Because it's an internet technology, we do not know, maybe one day some other companies like Momo, YY, suddenly they will overtake Tencent. There is this potential because technology is also a bit fast. Although in my opinion, these three, BAT, Baidu, Alibaba, and Tencent, they have a certain amount of moat already. To totally overtake them may take some time, and because they are so big, they have resources, they can continue to build. This is what I foresee. But if the rest of them catch up, right, the entire ETF will do well as well. So CQQQ, CQQQR, this may be one of the ETF that looks interesting right now. Okay, okay, thanks, Pete. And so what you can do is after you see, you can go and Q as in not Q lah, but you can go and Q in the market lah. Okay, so this is the idea that I have. I hope that this Thursday, very interesting lah. Now almost every Thursday there's something has happened. Last time it's Facebook, now it's China ETF. Seems like something is happening right now, correct? Things are cracking, and what it means for us is there is going to be a lot of opportunity. So yeah, if you don't know what to buy, you can buy the whole entire sector. So this is all. If you have any questions, please direct your questions to Tan Peng Yu Pit, okay? Or you can ask any questions right now. So Sean, you can continue to ask questions. But for me, I'm going to take a bath, then I'm going to go and queue for this possibly this CQQQ already. Okay, queue for QQQ. Okay, great. So have a good evening looking through all these possible stocks, and I'll see you next week on Thursday with Sean. I'll see you guys. Bye-bye.